Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 US Market Update. Well, it's Sunday night at the time of this recording, and I was hoping to have better news for those of you that are long the market or looking at least for a substantial bounce. Towards the end of the week, we were supposed to originally have a vote on the stimulus package on Friday. But then as we approached Friday, it became pretty clear what was going to happen on Friday, so the vote was scheduled originally for 3 p.m. today on Sunday. And then at 3 p.m. there was a note released from Nancy Pelosi that I don't think we're close, meaning the Democrats and the Republicans. Well, Rand Paul has the coronavirus, Mitt Romney's in quarantine, so we're missing some folks. And the vote came in at 47-47, and it takes 60 votes in order to pass it, so it didn't get passed. Futures open, limit down. So we're off that level. The futures are down at this point in time, but we're off that level. I'm not going to get into the he said, she said, or the politics of it. I learned a long time ago that no matter how passionate you are about your political views, there's somebody on the other side of the aisle that's just as passionate about theirs. But what I do is talk about how the decisions that our elected officials make affect the markets. That's what I'm here for, to talk about the markets. So with that said, let's look at the charts. Now, our last video is Hell Coming has really started to gain some traction. I wanted to thank each and every one of you for taking the time to watch the video and or leave a comment. And I thought on Tuesday when we do our Trade Finder, and by the way, please sign up for it if you haven't already. You can go to our website, ewotrader.com. Sign up. It's free Trade Finder, where every Tuesday we do a live webinar where we talk about the markets and look for a live case study for you to consider. And I actually have a bullish one, believe it or not, in this crazy market to go through and take a look at on Tuesday. But I also thought I'd share that story with you on how I actually got started trading Elliott Wave, especially since we have so many new people that are watching. I thought you might enjoy hearing about it. So make sure you sign up. And by the way, if you're watching this video, don't forget to give us a like, or even better yet, hit the subscribe button. We really appreciate all of your viewership. So here we were, and what Elliott Wave did, even though it may not have, quote, forecast the coronavirus, is it does give us really good targets, and they've been very spot on as far as support and resistance, targets of where the market could go out of this movement. So here was the first target set up, and that was the wave 5 ending. You can see this big move to the downside here, and the target was the previous 4. Just classic Elliott Wave stuff. When a wave 5 ends, you move back through the previous 4, and boom, that's exactly what happened, and we hit that level back on the 9th of March. So we had a nice little zigzag working here, and here's that zigzag pattern that I was talking about with our really cool new zigzag tool for profit source. And so the question is this the end? It's an extended C wave. The target was 100% extension with a 50% corrective B. We're now at 161.8, which was hit on the 18th of March, and then we closed there on Friday as the market was disappointed we weren't going to get the stimulus vote on Friday. So then the next level is if we don't hold here, there's is hell coming level right down here. And just think about the damage that's been done to the economy. You just can't close down an economy as large as the U.S. is without causing significant damage, and there has been. But imagine if we have the SPY come all the way down here, the S&P tank this far. And the reason I say is hell coming is if you go back and look, there's nothing. There is no support there to stop this from happening. If we close below here, and the second day is the meaningful one, but one day with volume might be enough to kick all the machines in, we'll have to wait and see. And by the way, you've probably heard this, but trading goes all electronic tomorrow. No more open outcry, no floor traders. Everything is going to be 100% electronic. And I think there might have been some uneasiness about that on Friday. Never happened before. I mean, you could argue the NASDAQ is electronic, so it gives you a bit of the fact that the markets work fine, and I expect them to work fine as well, but maybe there was a little uneasiness about something that we hadn't experienced before occurring on Monday. But I really think this is more of, are we going to get a stimulus package? And the market wants to see it passed. The market wants to see this occur. So one thing I think the charts are showing is that we're oversold. Let's look at the 10-day moving average. We're not maybe as oversold as you would think because we've kind of built in a little back and forth through here. But through all this move, other than this corrective move that occurred right back here in the beginning of March, we haven't really had much of a correction. There's been one or two up days sprinkled in there, but not anything that you would really consider a corrective move. We've been pretty much straight down in this C wave. So we have had a mono A, a mono B, and a mono C so far, and that's a bit rare. Usually one of those is complex in a zigzag pattern. So is the C going to be? Are we going to bounce up here? We talked about closing the gap with the 10-day moving average, coming back to that 100% level in the last recording, or are we just coming straight down here? I believe that we're going to get down here at some point in time. And I want to be clear on this, that when I'm showing you the charts, I'm just using my knowledge and experience with Elliott Wave to relay to you what I'm seeing in the charts. The market doesn't care where I think it's going to go. The market doesn't care what I think. The market doesn't care what you think. The market doesn't care what anybody thinks. The market's going to do what the market's going to do. What I try to do is show you what Elliott Wave is forecasting on where likely points of support and resistance are. That's really what we're doing. And they've been, I mean, just look at them. They've been incredibly accurate. And if history holds true, which it does the majority of the time, we are going to see at some point a pretty decent upward rally. The only question mark is it now or is it later? Do we have to go through hell first before that occurs? Looking at the volatility, this is the scary part here. It does look like maybe we're forming. We actually came down and hit the forecasted target for where the 4 correction could be. So that's really done its thing. It could come further down, but we've actually come and hit that level. If you look, when we touched it there on Friday. So we're right there at the top of where the forecasted 4 correction could be if the 4 started. Let's hope it comes down further than that. But here's the scary part is it looks like we need to have an even higher VIX before the whole thing is done. And things are kind of starting to make a little more sense. I know it's hard to say that in the chaos and the crisis that we're in at this point in time, but things are at least adding up or making sense. It's really confusing when things are going on in the market and nothing makes sense. That they don't jive with the equity market, the bond market, metals, etc. But at this point in time, if the market did go down all the way down to that level, obviously you could easily see a VIX back up that high. I also wanted to show you interest rates. Here's why I was saying that things are starting to make sense. So, we're getting the bounce. We had the move back down in volatility. We had a little bit of a rise back up in interest rates. That's a good thing. You don't want to see rates get too low, because at this point in time, we've commented on this enough times in the previous videos that when rates get super low, it's just showing you economic weakness. And we all know the economy is going to be weak now, and companies are just saying, forget the guidance. We don't even know what it's going to be like. And the question is going to be, if they pass a stimulus package, which they're going to pass something, you have to be convinced of that. Don't know if it's going to get done Monday, Tuesday, or Wednesday, when it's going to happen. But the key is going to be, is that going to be enough for the market to start the bounce? Or do we have hell on the way sooner rather than later? Take care, everybody. Thanks again for watching. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.